All right, let's jump into another deep dive. Today we're taking a look at Camlin Fine Sciences, CFS for short, and their Q2 results for FY25.
Okay, sounds good.
Now, for anyone out there who might not be familiar, CFS is kind of a big deal in the world of specialty chemicals.
Yeah, they are.
We're talking about things like antioxidants, performance chemicals, even those aroma ingredients that make things smell so good, they do it all.
Yeah, it's pretty impressive.
And their reach is massive. 9 manufacturing facilities, 5 application labs, 2 R&D centers all over the world.
Global for sure.
Yeah, they're everywhere. They've got their hands in everything from food and beverages to animal nutrition.
Huge market.
To get to the bottom of all this, we've got their brand new press release with the results, a really nice looking investor presentation, and of course those auditors' reports to make sure everything's on the up and up.
Got to have those checks and balances.
Exactly. But today isn't just about reciting numbers, it's about really understanding the story they tell.
Getting the full picture.
Exactly. So can CFS keep this growth going strong in a global economy that's, well, kind of unpredictable right now?
It's a really good question, and one that I think a lot of companies are struggling with right now.
For sure.
I mean, what's interesting about CFS is they seem to be doing this balancing act
Okay.
between pretty solid revenue growth and then also doing some restructuring that's hitting their bottom line.
All right, so let's start with the good news. Their revenue came in strong at Rs. 4,230 million.
Not bad.
Not bad at all. A decent jump from last quarter and even a little bit higher than last year.
Yeah.
But then we get to their profit after tax, the PAT, and things take a bit of a dip.
Yeah.
We're looking at a loss of Rs. 1,161.1 million compared to a profit in the same quarter last year.
A swing.
So how do we connect those two seemingly opposite parts of the puzzle?
Well, that revenue growth is definitely a positive sign, especially now.
Right.
To really get the whole picture, though, we need to take a closer look at how each region is doing. Because CFS is a global player, and their investor presentation actually breaks down revenue by region.
Oh, that's good.
And it's really interesting. Like CFS North America almost doubled their revenue from last year.
Wow.
That's not just by chance, though. They've been really targeting North America, especially in the pet food market.
Smart move. Those pet parents are willing to spend big bucks.
They really are.
Yeah.
And it looks like their European division, CFS Europe, also had a really strong comeback.
Yeah, after a bit of a rough patch last year.
Exactly. So having all those different regions must really help them when it comes to risk, wouldn't you say?
Oh, absolutely. So when one market is down, they can rely on another that's doing well.
Yeah.
It's kind of like diversifying your investments.
Yeah, exactly.
You don't want to put all your eggs in one basket.
Now they're not just diversifying geographically.
Right.
They're also getting strategic about what they're selling.
Okay.
Remember how they kept talking about value-added blends in the investor presentation? They're going beyond just the basic ingredients and making these specialized formulas that can be sold at higher prices.
So it's less about just selling basic ingredients and more about providing tailored solutions, right?
Yeah, exactly.
It's like, I don't know, the difference between buying flour and sugar at the store versus a pre-made cake mix.
Yeah. You get more value, it's more convenient, and you'll probably pay a bit more for it.
Okay. I'm with you.
That's a smart move.
Yeah.
Especially when you think about all the rising costs right now.
For sure.
But now, let's tackle the big question, why the swing to a loss?
Yeah.
And I think the answer is hidden in that exceptional items section in their financial statements.
Okay, exceptional items doesn't exactly sound thrilling.
It's usually not the most exciting part, but this is where things get really interesting, I promise.
Okay, I'm all ears.
Yeah.
What kind of exceptional things are we talking about?
Well, the biggest thing is a huge impairment charge for their diphenol facility in Italy, run by CFS Europe.
Okay.
It's a hit of about Rs. 165 million.
Wow, that's a lot.
And there's another significant impairment charge of Rs. 303 million for their CFSWL business in China.
Okay, so they're basically saying that certain assets have lost value, right?
Yeah, that's the gist of it.
But why such big write-downs? What happened?
Well, remember that strategic review they mentioned in their presentation?
Yeah.
It seems like CFS is seriously evaluating all their operations, especially in places where the economy isn't doing so well.
Yeah.
Those charges tell us they're changing their strategy.
Okay.
Maybe scaling back in certain areas and focusing on places with more potential.
So even with revenue going up, they're not afraid to make tough decisions.
Right.
And streamline things for the long run.
They're playing the long game.
They are. So it sounds like they're not just chasing quick profits if it means hurting their overall strategy.
They've got their eyes on the prize.
But did they see this level of restructuring coming? Were they on track with what they projected for the quarter?
That's a good question.
To answer that, I guess we need to look at their operational highlights.
Let's dive into those and see what they tell us.
Okay, lead the way.
All right. Okay, so right off the bat, their consolidated revenue did improve. It's over ours. $4 billion for the quarter.
Nice.
But, it's not just about the top-line growth. Their gross margins actually also went up to 48.2%.
Oh, wow. That's up from 44.9% last quarter.
Yeah?
So even with those impairment charges and the loss, their core business seems to be doing all right.
It does. It does.
What's driving that margin improvement?
Well, it could be a couple things. They've really been focusing on being efficient at their manufacturing facilities,
Yeah.
streamlining everything, getting more bang for their buck.
Makes sense.
And remember that shift towards those higher margin value-added blends we were talking about.
Yeah.
I bet that's helping too.
Right.
Plus, they're seeing strong growth in aroma ingredient sales. That segment is doing really well.
Okay, so they're kind of hitting that sweet spot of running things efficiently and focusing on the right products.
I think so.
And speaking of strategic moves, they just acquired Vita4 Invest NV.
Oh, yeah.
That seems like a pretty big deal.
It is. It gives them a solid position in the European and African feed and pet food markets.
Gotcha.
These are areas where CFS has been trying to grow, and Vita4 already has a great network there.
Smart move.
They're not starting from scratch.
So it's not just about expanding geographically. It's about getting that specialized knowledge and using existing channels.
Exactly.
But acquisitions can get expensive.
Yeah.
What does their cash flow statement tell us? I saw something about a decrease in cash and cash equivalents
Oh, you're right.
in the notes.
Yeah, you're right to point that out. The decrease is mainly because of investments in property, plant, and equipment.
So they're putting their money where their mouth is.
They are investing in their future growth.
It seems like they're making those short-term adjustments while keeping their eye on the bigger picture.
They are.
They're even liquidating CFS Pahang Asia Peat Ltd. Their subsidiary in Malaysia, according to the press release. Why would they do that while also acquiring companies elsewhere?
Well, from what we can see, CF Pahang wasn't really contributing much to their overall financials.
Okay.
So they're probably just streamlining things,
Yeah.
focusing on the areas with the most growth potential.
Right. Got to allocate those resources wisely.
Exactly.
And along those lines, they've also appointed Mr. Sorabi Padhai as general manager of their food division.
Bringing in new leadership.
Shows they're serious about doing well in the food industry.
It does.
But beyond just the financials, their investor presentation talks a lot about sustainability.
Oh, yeah.
How does that fit into their overall strategy?
Well, it seems like CFS is taking a really well-rounded approach.
Okay.
They're not just talking about it. They're actually setting goals.
Like what?
For instance, they want all their manufacturing facilities to run on renewable electricity by 2030.
That's a big goal.
It is. It shows they're serious about reducing their impact.
Absolutely.
And they're also involved with social responsibility programs, supporting organizations focused on education, healthcare, and helping communities.
So they're not just checking boxes, they're actually trying to make a difference.
It seems that way.
So they're trying to do good while also doing well.
Yeah.
Which can really set them apart.
Definitely.
But let's come back to that question from before. Can CFS keep growing?
Yeah.
We've seen their revenue going up, but they're also restructuring and investing, which affects their profitability.
It's a tough one.
What are your thoughts?
Well, it's a mixed bag. There's definitely some challenges coming up, but CFS is taking steps to face them head on.
Yeah.
They're diversifying how they make money. They're focusing on products that bring in more profit. They're making their operations more efficient, and they're making strategic acquisitions.
Okay.
Plus, their focus on sustainability could attract customers and investors who care about those values.
Yeah, they're kind of building a more resilient business model.
They are.
One that can handle those economic ups and downs.
That's a great way to put it.
But as we've been digging into all these materials, is there anything that's really stood out to you?
Honestly, I think it's impressive how they're not just reacting to the market. They're actively shaping their future.
Yeah,
You know?
I see what you mean.
Like, remember how they were talking about blends and those highlights? They're really dominating that space.
Yeah, they are.
It's not just selling ingredients anymore.
It's not.
It's about being the place to go for those custom solutions.
Right, they're leveraging their know-how to create something truly valuable.
Exactly. And that resilience we've been talking about.
Yeah.
That's boosted even more by how spread out they are geographically.
Makes sense.
Not putting all their eggs in one basket.
Exactly. Spreading the risk, grabbing those opportunities.
Right.
But let's go back to something you mentioned earlier. Innovation.
Oh, yeah.
We see it in their blends, new products, even in how they're optimizing production.
For sure.
What stands out to you about how they approach innovation?
It's fascinating how they're playing both a short game and a long game at the same time.
Okay.
They're always improving their existing processes, like take their vanillin production at the Dahej plant.
Yeah.
They've really optimized that.
Yeah.
But they're also exploring completely new things, like that new process for HQ derivatives.
So they're staying ahead of the curve.
I think so, ready to jump on new opportunities.
It's like they're always pushing those boundaries, trying to get better and evolve.
That's innovation.
But, innovation doesn't just happen on its own. You need the right people.
Oh, for sure.
What did we see about their leadership and talent in that investor presentation?
Well, their board of directors is a really interesting mix of people.
Okay.
You've got folks who've been in the industry forever, experienced professionals.
Yeah.
They've got a chartered accountant with tons of experience in finance, a chemical engineer who's been with them for over 15 years, even someone from private equity. Wow. It's a really well-rounded team with a lot of different knowledge.
Yeah, they've got all their bases covered.
I think so.
And their senior management team seems just as impressive.
Definitely.
Leaders with global experience, people who've managed multiple manufacturing sites, experts in specific products like those aroma ingredients.
It's not just a team.
They're building a powerhouse.
Exactly. And that focus on talent carries over to their ESG stuff, too.
Really?
They're making employee well-being a priority, offering chances to grow professionally, and creating a really inclusive environment.
That's great.
They know that their people are their biggest asset.
For sure.
That's key.
So Camlin's story is more than just numbers on a page.
Much more.
It's about having a vision, taking risks but calculated ones, being dedicated to innovation, and realizing how important their people are.
Couldn't have said it better myself.
As we wrap up this deep dive, I'm kind of cautiously optimistic about what the future holds for Camlin.
Yeah.
There are definitely some hurdles ahead, but they're showing us they're resilient, adaptable, and they're thinking strategically. They're in a fast-paced industry, making bold moves, and committed to sustainability.
Yeah.
To everyone listening, keep your eye on this one. Camlin is definitely a company to watch.
For sure.
It'll be interesting to see how their story unfolds.
It will.
Well, that brings us to the end of our deep dive.
Time flies.
Thanks for joining us on this exploration of Camlin Fine Sciences.
It's been a pleasure.
Until next time, keep learning, keep exploring, and keep diving deep.
And as always, thanks for listening.